The paper gold market might be in trouble now, because recently China has just shut down its paper gold trading. But let me clarify first. When I say shut down, it doesn't mean China has stopped all paper gold trading across the board. What actually happened is that several major Chinese banks have announced that they will no longer offer trading services for precious metals, not just gold, but also silver. They won't sell to retail investors. Big investors might still be able to buy though. So why did they do this? The government explained in the news that they did this to protect investors from volatility, because gold has now dropped from its all-time high and is down by 28%. Which means that in China, you can still buy and sell gold. But if you're an investor in China who wants to trade gold, you have to trade physical gold that you can actually hold. Physical gold is fine, but if it's paper gold, Beijing says no. At this point, I wondered, is China really doing this just to protect investors? Because right now, China has been aggressively stockpiling gold, and they've been doing it for a long time too. That means China has a ton of gold. If China wanted to challenge the US dollar using gold, China would definitely want the price of gold to go up. So the way China could make gold more expensive is, as I mentioned in gold situation, why China's been buying gold for years is they know the Western market price has been suppressed for 50 years. The fair value, the real price of gold, should be $18,500. Meanwhile, it's trading at only $4,000. You might ask, why the huge gap between the fair value and the actual trading price? Why is there such a huge gap? The reason is because there's a market for trading gold with paper contracts. That makes the market feel like there's an overwhelming supply of gold available to buy, even though in reality there are way more paper contracts than actual physical gold. At the very least, it's 9 times more. So the specific method through which China can effectively drive the global price of gold significantly higher is by creating authentic and real price discovery, essentially making the whole world fully aware of the true value of gold. And the way to make the entire world recognize the real price of gold is to systematically dismantle and deconstruct the highly speculative paper gold derivative market. But whether they can actually do it or not, we don't know. Anyway, in this video, let me tell you more about it. Let's start with what China is currently trying to do, which is to bring down the Western world's paper gold market. I believe that this issue it's something that China has probably been planning for a long time already. Because when China says it wants to reveal the fair price value, the real price of gold to the world, they've been talking about this since 2014. Back then, it was Mr. Luode, the chairman of the Shanghai Gold Exchange. Wait, I don't think it's pronounced Luode. Let me ask my child's teacher, Lao Shi at Dadi school real quick. Okay, here it is. It's pronounced like this. Anyway, that's it. But Chinese pronunciation is tough. The accent's tough. Learning as an adult is really hard, isn't it? But nowadays, China plays a huge role in the world, whether it's in business or even in the field of finance. And now, I would like to take a moment to introduce the sponsor of this video, Dadi Kindergarten. Dadi is the school where I enrolled my son in pre-K. He wasn't even 3 years old yet. At that time, he could barely speak. And the reason I sent my son to Dadi is because I felt that Chinese is important. So I started looking for a school that teaches Chinese. And I wanted my son to learn in a fun and relaxed way, no pressure. I just want my son to be happy. I've actually been inside the kindergarten classroom at Dadi. The way they teach is like they have Chinese characters, Chinese stories, and Chinese teachers. They teach in a lifestyle way, teaching songs so the kids can learn and absorb the Chinese language. And it all feels really natural, because here, more than 50% of the teachers are Laoshi, teachers who come directly from China. The rest are English-speaking teachers, and they're native speakers too. And there are also teachers who speak Thai. So the kids here get to learn languages directly from native speakers, 2 or even 3 languages. And since they're so young and start learning languages at such an early age, they don't even realize yet that learning a language can be difficult. Before they even realize it, the kids have already absorbed Chinese and English into their hearts. And yes, the kids become familiar with both Chinese and English, the accents, the reading, and the natural way of using the languages. So if anyone is looking for a school where their child can naturally absorb Chinese and English naturally and learn in a fun way without being forced, Dadi Kindergarten is the answer. All right, let's get back to our news. You are not a real guy. Mr. Xu Luode, the chairman of the Shanghai Gold Exchange, once gave a speech at the LBMA, or the London Bullion Market Association, which is the gold price-setting system of the Western world. He went on to explain that gold from Shanghai would fundamentally transform the existing global landscape where gold prices are currently set in the West and then sold in the East. He also made another significant and thought-provoking statement. When exactly will China have a powerful voice in the international gold market? The true price of gold will have to be fully revealed to the entire world. Those were his words 12 years ago. So what happened this year? On June 24th, the Industrial and Commercial Bank of China, or ICBC, the largest bank in China, announced it would stop selling paper contracts for precious metals, including gold and silver, to retail investors. It's not just ICBC. Postal Savings Bank made the announcement first, followed by Ping An and China Guangfa Bank. Right now, major banks in China are gradually unclugging from the paper gold system one after another. This means retail investors aren't banned from gold, but if they want to invest, they must buy physical gold they can actually hold. Whether it's chains, bars, or nuggets, whatever form, that's how it has to be. So why is China doing this? On the surface, news reports say it's to protect investors from risks because, remember, with gold, in early 2026, various financial institutions were involved. Some even predicted that gold would reach $20,000 by the end of this year. Because back in January 2026, right at the start of the new year, the spot gold price shot up to an all-time high, over $5,500 per ounce. But now it's dropped. It's really crashed too, down to around $4,000. It's down 28% now. We're not even sure if it'll hold at $4,000. So that means the gold market is definitely volatile. Small investors are taking a hit. The government has to step in and take care of things. This isn't really surprising, but there's actually another, bigger reason than just protecting small investors. China might want to shake things up and show the world the real price of gold. The gold fair price value. Let me show this clip again, which I already showed at the beginning of the video. The gold fair price value is currently at $18,500 per ounce, while the trading price is around $4,000 per ounce. This price has been suppressed by the Western world for many years, about 50 years now. So how does the Western market suppress the price of gold? They do it by creating a paper gold market. In the gold situation clip, I already explained how they do it. According to the reported figures, the value of paper gold contracts worldwide is over $633 billion. Meanwhile, the actual physical gold backing these contracts, according to reported figures, is only about 500 tons. Or if you convert that to monetary value, it's just around $70 billion. That means the real gold that actually exists is 9 times less than the paper gold. In other words, the supply is exaggerated by 9 times. Let me paint a picture for you. How does this work? Let's say, for example, that this phone in my hand represents gold. There's only one piece of gold with me. You say you want to buy gold from me, but through a paper contract, right? So I issue you a certificate. Here you go. You have the rights to this piece of gold. Then what happens next? Another person comes along. Oh, they want to buy gold too. Well, you probably won't withdraw the gold, right? So I issue another certificate giving you rights to this gold. Now, 9 people all have rights to this same piece of gold. It works because I figured you guys just want to trade for profit and probably won't actually withdraw it. And since no one's withdrawing, it's better to just issue more certificates. And there's only that one piece of gold. Can you picture it? And if you ask, what would happen if they all wanted to withdraw at the same time? Oh man, if everyone wanted to withdraw at once, but I only have that one piece of gold. Do you think I'd go bust? I'd be ruined. That's exactly how the paper gold market works. So what China is doing right now is basically overturning the paper gold trading system that the Western world created. China says if you're going to buy gold, just buy the real thing. Bars, physical gold, actual pieces. Why bother buying paper gold? At this point, some people might wonder, is it really true that the amount of physical gold is less than the amount of paper gold contracts? One way to look at this is to compare the price of paper gold contracts with the price of actual physical gold. Are they the same? If it's gold, the spread between them isn't that big. I mean the price of actual gold. Take a look at this chart and compare it to the price of gold paper contracts. There's a difference, but it's just a tiny one. So when investors look at it, they'll say, that's fair enough or something like that. It's okay. But if you want to see a bigger difference in precious metals, another example is silver, which is also a precious metal. There was a time when the price of physical silver and the price of paper silver were this far apart, like a 40% difference. But anyway, it only stayed that far apart for a short while. Now the gap isn't that big anymore. Investors are saying, see, it's not so bad. So is there another way to look at this? Like, is there any evidence that paper gold is it really worthless? Or is there really that much more paper gold than physical gold? Another way to look at it is to see whether top investors are selling off their paper gold contracts or not. Are they sweeping up real physical gold and keeping it for themselves? Or are they dumping US dollars? So is there anyone doing all three of these things at the same time? Is there? Yes, there is. And are they skilled investors? Let me tell you, they're top-level investors in their respective countries, because those people are the central banks of each country. Now, are central banks financially savvy enough to be considered a reference point? What do you think? So let me ask Sai. Sai, what do you think? I think they probably could. And here's something that makes me go, wait, really? Central banks selling paper gold to buy physical gold bars? Because honestly, central banks are probably the institutions most accustomed to holding paper assets. Why is that? Because they print money. They're the most expert institutions at printing money. What's happening right now is something we've never seen before in the modern financial era. Take a look at this chart. Central banks around the world are now holding more gold reserves than dollars. They've already surpassed the United States. And just in the first quarter of this year, central banks around the world have already bought 244 tons of gold. It's not just that this quarter is very high, quarter this year either. Central banks have been buying more than 200 tons of gold for 10 quarters now. So for the past 3 or 4 years, you might wonder if those numbers are really that high. Is that a lot? Let's look at the top line first. See, the title of this graph says that the reports that come out are estimated to be much lower than the real numbers, 15 times lower. According to World Gold Council data, they report 244 tons per quarter, are just the minimum. See, wow, banks all over. Why are banks buying gold? And how's it funded? They use US dollars to buy it. Where do they get those dollars? They sell US Treasury bonds for cash and use that to buy gold. Why is this surprising? Because for 50 years, this strategy was completely flipped. In the past, central banks would buy US government bonds. US government bonds to keep as reserves, not gold, because US government bonds come with a very beautiful promise. A promise to pay interest, Every year, you'll get interest according to the amount that they've set for you. And then when the period ends, when the contract ends, you get your principal back. Meanwhile, gold, if you hold on to it, you can touch it, feel it, even take a selfie with it. Sure, but it doesn't pay any interest. It doesn't generate returns for you. There aren't any. No dividends, no payouts, none at all. So the reason why banks are willing to sell assets that pay out, like government bonds, in order to buy assets that don't pay anything at all, like gold, is because central banks around the world don't trust the US dollar and don't trust the contracts either. Paper gold contracts like they used to. If you look at this is a graph from COMEX. You'll see that the graph line drops sharply, plunging right through the line. See? That means central banks are also selling a lot of paper gold contracts. For me, as I've said in several clips, when we want to know what's important to someone, we don't need to listen to what they say. We should look at where they put their money, where they actually invest it. That's what really matters to them, not what they say. By now, some of you might be starting to think, wow, so if the global gold market, especially in the West, in America, if you can't trust them, can you really trust China? That's a good question to think about. Honestly, if it's about the system, you can't really trust China's currency, the yuan, either. It's honestly not very trustworthy because China has strict regulations called capital controls, and these laws don't require transparency. They don't have to be open about everything. They don't have to make things so clear that outsiders know exactly what's going on, because under their laws, it's the government that makes all the decisions. Outsiders have no say. But if you ask, so what exactly is China trying to do right now to compete with the dollar? And how are they trying to get people to trust the yuan? Well, that's just it. They use gold. They peg the yuan to gold, creating what's called an anchor between the yuan and gold. China has actually built this system called the Gold Corridor. I've already explained it in detail in the Gold Corridor video, so you can check that out. In short, China sets up a system where whenever anyone wants to make a trade deal or do business with China and pay in yuan or buy and sell in yuan, some countries might hesitate because, hey, the yuan seems risky. Holding yuan? Is that a good idea? China's saying just try holding it, because you can exchange yuan for gold immediately. This encourages countries previously hesitant to hold yuan to do so. Gold makes it convenient, with Shanghai acting as a hub for stored gold. But some argue Shanghai's financial system isn't open enough. No problem. China's already prepared with a vault in Hong Kong as well. Right now, the gold vault in Hong Kong, built to hold about 200 tons of gold, has now been expanded tenfold to accommodate up to 2,000 tons of gold, just like that. And there will also be gold vaults in other member countries as well. This method of pegging the yuan to gold is exactly how China plans to wage a currency war against the US dollar. In the end, though, this news still doesn't really include anything yet. But what I want to say is this is one of the wars to find the real money. Money that actually has true value. Money that has quality. And this war to find quality money versus money without quality, it's not just about gold versus the US dollar. There are other pairs too. For those who are good at whatever they're good at, they just go with that. But I just want to say, find money isn't that easy. Earning a living takes time and effort before we get any money. It's tough. So when you do make money, don't forget to identify a suitable place for you should consider placing your money into a safe place where it won't lose its value over time. By taking that step, you can ensure that all of your hard work and dedicated effort won't go to waste, but will instead continue to provide a solid foundation for your future financial security.